So let's start our accounting equation review. So we have both a basic accounting equation and an expanded accounting equation. So it's going to be pretty important for you to know both of these and to memorize these accounting equations. So the basic accounting equation is just your assets equals your liabilities plus owner's equity. Right? So your assets are things that a company has. Think of it as cash and supplies and equipment. They are things that a company has and that they use in order to run the business. Now, those assets could be owned by creditors, or they could be owned by the owners of the business themselves. So your assets equals your liabilities, which are what we owe other people, right? What we owe our creditors. If we owe money or if we owe future services, those are all going to be liabilities. And then your owner's equity, that's what the owners can claim of the assets, right? It's the part of the company that the owners truly own. And so your owner's equity is broken up into 4 different pieces. And that's where the expanded accounting equation comes into play. So you have your owner's capital, owner's drawings, revenues, and expenses. So all 4 of those last pieces in our expanded accounting equation, all 4 of those are part of owner's equity. So owner's equity, think of it as like an umbrella, right? And we have capital, drawings, revenues, and expenses all under the owner's equity umbrella. And you'll notice assets did not expand, right? Those still stayed at just assets, and liabilities didn't change either. So the only piece that changed in this expanded accounting equation was your owner's equity. One other thing to take a look at is the pieces that increase your owner's equity and the pieces that decrease your owner's equity. So owner's capital and revenues both make owner's equity increase. Owner's drawings, which is when a owner takes money out of the business for personal use, and expenses, those both make your owner's equity decrease. So again, it's very important that you remember both the basic accounting equation and the expanded accounting equation. So before we work on some example problems dealing with the accounting equation, I just wanted to go through all of these different accounts and figuring out whether these accounts are assets, liabilities, or owner's equity. So we're going to start off with cash. So cash is going to be the most common asset that you're going to see. Every single company is going to have cash. It's also the most liquid asset, which is going to come into play when you are dealing with your financial statements and you need to list assets in order of liquidity, right? So cash is always going to be the first asset ever listed on a balance sheet, on a trial balance. It's always going to be there. Now, supplies. Supplies are going to be things like office supplies. So think of supplies as paper and pencil. And so those are assets as well. Now, owner's capital. We just talked about this on the previous slide with our expanded accounting equation. Owner's capital is one of the 4 pieces that makes up your owner's equity. Service revenue. So service revenue is whenever we perform a service as a business, and we want to show how much we earned. And so that's a revenue account which falls under owner's equity. Accounts receivable. Accounts receivable is whenever a customer owes us money. So think of it as you will be receiving money in the future, right? So if we will be receiving money, that sounds like a good thing. So we're going to put accounts receivable under the asset category. Now, unearned service revenue is the first real tricky one on here. We just talked about service revenue a few accounts ago, right? And we said that was a revenue that fell under owner's equity. Unearned service revenue is different. So service revenue is when we performed a service. Unearned service revenue is when we got paid before we did any of the work. So we now owe that customer services. A few of the common examples of unearned service revenue are gift cards or plane tickets, right? So if you booked a plane ticket on Southwest, you're probably not taking that flight right then and there, right? We're going to say that you're going to book a plane ticket and you're going to fly next month. So Southwest Airlines has your money, but they haven't flown you to your destination yet. So they owe you those services. And so unearned service revenue is going to be a liability. So that's going to be a liability account that does not have the word payable in it, right? Typically, we would say if we see the word payable, it's going to be a liability. Unearned service revenue is that one account that you're going to see that is still a liability without having the word payable in the account title. Now, owner's drawings, that's one of the four pieces of your owner's equity, right? We have capital, drawings, revenues, and expenses. So those are your four pieces of owner's equity. So owner's drawings falls under owner's equity. Rent expense, well, it says it right there in the name that it's an expense account. And we just said that expenses fall under owner's equity. Now, equipment. So equipment is going to be like machinery or a delivery van. So equipment is going to be an asset that helps a business run their business and make money. Prepaid rent is when a business pays for rent in more than 1 month time, right? So if you paid for a year's worth of rent, we're going to call that prepaid rent. And anytime that you have any of these prepaid expenses, we could have prepaid rent. We're going to see another example here in a few more accounts of prepaid insurance. Those are going to be assets because we have this rent already paid for. Now, salaries expense. Salaries expense is once again another one of those expenses that falls under owner's equity. Accounts payable. We were talking about this a bit earlier. Whenever we see the word payable, we need to automatically be thinking liability. Because what's happening here with accounts payable is that's money that you will have to pay someone else. And so we are liable for that amount. So it falls under liabilities. Now, inventory. Inventory is going to be what a company can sell, right? So if we are, let's say we are Staples, right? So we sell printers and notebooks. Those printers and notebooks are our inventory. So inventory is going to fall under an asset. because that's something that a business has that helps them run the business. Now, prepaid insurance. This is under a similar category as prepaid rent. So this is when you pay for an insurance policy for more than 1 month at a time. And so that's another asset. Now, interest payable. Once again, we see that word payable. And whenever we see the word payable in an account title, we're thinking liabilities. So these are just some of the accounts that you're going to see in your class. And it's very important to know whether these accounts are assets, liabilities, or fall under the owner's equity section. So now we can work on an example problem using the accounting equation. So this problem tells us that at the beginning of the year, RD LLC had $500,000 in assets and $300,000 in liabilities. Throughout the year, assets increased by $50,000 and owner's equity decreased by $25,000. We need to find out how much did RD LLC have in liabilities at the end of the year. So, the first step is to figure out our accounting equation for the beginning of the year. So again, our accounting equation is assets equals liabilities plus owner's equity. And we're told that at the beginning of the year, RD LLC had $500,000 in assets and $300,000 in liabilities. So we can plug that in to our accounting equation. Now we just need to use algebra to find our owner's equity, right? So we would subtract 300,000 from each side to see that at the start of the year, RD LLC had $200,000 in owner's equity. So that's step one, is to get that baseline beginning of the year accounting equation figured out. Now we can look at what has happened throughout the year, right? These changes in our assets and our owner's equity that we're told about. So we're told that our assets are increasing by 50,000 and our owner's equity has decreased by 25,000. And we want to leave liabilities as our unknown, because that has also changed throughout the year. We just weren't told in detail what those changes were. So we'll add our $50,000 increase to our assets, and we'll subtract out the $25,000 decrease to our owner's equity. And then we find out that our assets will be $550,000. That's going to equal our liabilities plus our owner's equity of $175,000. Our next step is similar to what we did when we were setting up our beginning of the year accounting equation. Well, what we want to do is we want to subtract the 175 from each side. And that will tell us that our liabilities will be $375,000. So we can use this accounting equation to help us find any missing part of it, right? We found our owner's equity at the beginning of the year. That was the missing piece there. And then we just found the liabilities for the end of the year. That was the missing piece there. And if they would have asked us in another question to find assets, we could have done that as well. So that's our basic accounting equation, right? Assets equals liabilities plus owner's equity. Now, in this next problem, we need to figure out the missing piece of the expanded accounting equation. So we're no longer thinking just the basic accounting equation that we were working with in the last problem. Now we need to think about the full expanded accounting equation. So we're told our assets are $700,000. Our liabilities are $350,000. Our owner's capital is $200,000. Owner's drawings is $35,000. Revenues are $500,000. And we need to solve for our expenses. So there's our expanded accounting equation, right? Assets equals liabilities plus owner's capital minus owner's drawings plus revenues minus expenses. Remember, your owner's equity breaks off into those last four parts with capital, drawings, revenues, and expenses. So now we can start plugging in our pieces here. Our assets were $700,000. So $700,000 equals our liabilities of $350,000 plus our owner's capital of $200,000 minus the owner's drawings of $35,000 plus the revenues of $500,000 minus expenses, right? Because we're just looking to solve for our expenses. So if we simplify the right side of the equation, we go liabilities plus capital minus drawings plus revenues, we'll see that those four numbers come out to be $1,015,000. So now we're in a similar spot as to where we were when we were working on the basic accounting equation example. So we need to subtract $1,015,000 from both sides, and we see that our expenses are $315,000. So you can use this expanded accounting equation in a way that's similar to your basic accounting equation if you're trying to find these missing pieces. Right? We just plugged in everything that we knew and then just solved for the unknown. Are there any questions so far? Okay, so let's take a look at this example. So instead of being told our assets are $700,000 and our liabilities are $20,000, we're now told what each individual account balance is. So this is where knowing which accounts fall under which categories is really going to come into play. So we're told that our cash is $20,000, accounts receivable is $15,000, supplies is $10,000, equipment is $50,000, accounts payable is $30,000. We are looking for our owner's capital, so we don't know that amount. Owner's drawings are 10,000. Service revenue is 45,000. Salaries expense is 10,000. And utilities expense is 5,000. So what we need to do now is figure out which accounts go where. So starting off with cash, we said that that was an asset from earlier, right? So we'll put an A next to cash, so then that way we know that that's going to go under the asset category. Accounts receivable, again, this is when other people owe us money. So we will be receiving this money in the future. So we're going to count that as an asset as well. Supplies are things like office supplies. So that's going to be an asset because that helps a business run the business. Equipment, stuff like machinery, delivery vans, computers, that is another asset that a company has. Now, accounts payable is when we will be paying other people money. So sometimes that gets confused with accounts receivable, right? But accounts receivable is when people owe us money. Accounts payable is when we owe other people money. And since we owe people money, accounts payable is a liability. And once again, whenever you see the word payable in an account title, be thinking liability. Owner's capital is just your owner's capital. Owner's drawings is just owner's drawings. Service revenue. So this is when we have performed the service. So that makes it fall under revenue, right? It's when it's unearned service revenue that it would fall under a liability. But if it's just called service revenue, that means that we've done the work, so we count that revenue. And then we have salaries expense and utilities expense, and both of those will fall under expenses. So that's the first step that I would recommend doing in a problem like this. Especially when you're working on a homework problem or an exam problem, it's probably not going to be set up in nice groups like it was here, right? Where all the assets are together and it's in line of the expanded accounting equation. It's probably not going to be that way when you are taking an exam. So if you can break up each of those accounts into which category they fall under, it could be helpful for you. So now the next step is just to plug in all of these numbers. So the first step that we're going to do is plugging in all of our assets. So we have our cash amount of 20,000, accounts receivable of 15,000, supplies of 10,000, and equipment of 50,000. So you'll see that all of those added together will be the amount for your assets, because those are all of the assets that we have. Now for your liabilities, we only had one liability, right? We just had accounts payable. So we'll plug in that 30,000 for our liabilities. Owner's capital is what we're trying to find. So our next piece will be our owner's drawings of 10,000. Remember, your owner's drawings are subtracted in the expanded accounting equation. Then we have our revenue. We had one revenue account. We had just service revenue of 45,000. So we'll plug that into our expanded accounting equation. And then we had our two expenses. We had our salaries expense of $10,000 and our utilities expense of $5,000. And once again, remember, just like owner's drawings, expenses are going to be subtracted in your expanded accounting equation. So we have all of our individual accounts now listed in this equation, right? And it looks sort of busy, but when we take it piece by piece, hopefully that will make it a little less scary. So here's just that same work that we just had. Our 4 assets listed, 1 liability, our owner's drawings, our 1 revenue, and our 2 expenses. So now we're going to simplify this piece by piece. First, we're going to add up our 4 assets. So when you take your cash balance plus your accounts receivable plus supplies plus equipment, you'll see that your total assets is $95,000. Now, we're going to simplify the right side of the equation. So we're going to take our liabilities of $30,000. We're going to subtract out the owner's drawings that we had of $10,000. Add in the $45,000 of revenues and subtract out our salaries expense of $10,000 and subtract the utilities expense of $5,000. And all of that math will come out to be $50,000. And then once again, it's a simple equation that we saw earlier when we were working on that basic accounting equation problem. We have 95,000 equals 50,000 plus owner's capital. So what we'll want to do is subtract 50,000 from both sides, and we see that our owner's capital is $45,000. So whether you're given assets and liabilities and they ask you for your owner's equity, or you're given some pieces of an expanded accounting equation and you're asked to find your owner's capital, or you could be given a problem like this where they list out each individual account and then you need to find the missing piece. Whether it's any of those scenarios, what's really important is to remember these equations, right? Remember that it's your assets equals liabilities plus owner's equity, and that's your basic accounting equation, or your expanded accounting equation, which is your assets equals liabilities plus owner's capital minus owner's drawings plus revenues minus expenses, right? If you remember those equations, you'll be able to figure out any of the missing pieces that are being thrown at you in these problems.